think 28. We had 32, and we talked about 32, and then the 28 also. And I think both of those levels got triggered yesterday, and then it really slowed down after that. But again, today, I mean, we had one price action opportunity so far. I don't know if we're really going to get too many opportunities today. Like I said, the anticipation of the FOMC stuff is going to put a damper on the market. So trade accordingly. Expectations have to be brought down a little bit. I know I've been saying that a lot lately, but it's fact. We can't change volatility. We don't have control over it. All we can do is trade volatility. All right. So given that scenario, we have to be patient and wait for the volatility to get back into the market. I mean, if somebody wants to trade 10,000 contracts, we could throw some volatility in there, but we need a couple people to trade 10,000 contracts to throw some volatility. All right, now I'm just talking for no reason, so let's just shut up. Nobody's going to be trading 10,000 contracts around here, not that I know of. It hung around 42 all day yesterday, if I'm not mistaken. Right there, Don? Again, thanks again for helping me out yesterday. I appreciate it. All I know is that they get great reviews, and they all tell me how much they love you and when's Don coming back. So just want you to know that. Now, if your wingman was around, it's either that would have helped, but they would say how much they love my wing. Oh, there he is. But you only put it to us. It is hard to find good help. I agree. Of course, it would have been better. At least he didn't use his daughter as an excuse this time. It was the internet, so that was good. Said he lost the internet. That was his excuse. His daughter could be a good excuse. Still, next time. All right, let's see if there's any numbers coming out this morning. Not that it really matters. The big number is going to be out later on this afternoon. Well, he made money. Good. I think we all kind of made a little bit of money yesterday. Atlanta Fed business inflation expectation index is coming out. That's a small number, not really a big one. So let's see what happens. Today's Federal Reserve meeting may be the most watched in recent years. Oh, come on now. Let's not get carried away. With famed investor Paul Tudor Jones even calling it the most important in Chair Jay Powell's career. And Tudor Jones was even trading still. With inflation gathering speed and job markets tightening, the FOMC will have way the path for the country's monetary policy. Chiefly, the Fed funds rate targets range now at 0.0 from even to 0.05, which means that there's nothing that's going to change. And asset purchases that could continue at 120 billion a monthly pace. So that's what they're looking for, that the Fed funds rate stays the same, almost zero, and the purchases continue at 120 billion a month. Again, if it is widely expected that no tightening will occur this time around, but investors will be watching closely at any signals that the Fed is setting the stage to become less accommodative. Investors will be focused on the central bank's policymakers' summary of economic projections, specifically the dot plot chart showing expectations of when the Fed officials expect interest rates to rise more than half of the 51 economists surveyed by Bloomberg forecast a median of 18 officials seeing an interest rate hike during 2023, in contrast to March, in the March dot plot, where the median expectation was 2024 for liftoff. Fed watchers will also be parsing Powell's comments on whether he softens his instances that inflation is transitory. As the market continues to, well, not continue, slowly downtick, support down at 30. Perhaps the most crucial, most vocal critic of the transitory inflation theory is Larry Summers, former Treasury Secretary and ex-director of the National Economic Council. I do not see how any responsible policymaker can fail to recognize that overheating is now the largest risk in the near term for U.S. macro outlook. He said via Twitter on June 10th. If overheating takes place in the United States and there is an eventual spike in interest rates driven either by the Fed or the markets, there will be an enormous risk to all already fragile and over-leveraged global economy. The bond market, however, seems to agree with Fed's narrative of transitory inflation as the Treasury yields remain below 1.5%. So I hate to tell Larry Summers, but the bond market is not saying the same thing. This is a very, I have to admit that this is a very unique, obviously, situation coming off of a pandemic, which, again, when we were learning about economic factors, the last time they had a pandemic, there was, I don't think there was a Fed, but it wasn't as global of an economy as it has been, or it is. Consequently, the dynamics of what they're doing now has never been written about, talked about. You never know how the results are going to come out, eventually transpire and play out. So this is a definitely, people are sitting there saying something like what Larry Summers says, that this is it, that it's going to be tragic. Overheating takes place in the United States and there will be an eventual spike in interest rate driven by either the Fed or the markets. There will be an enormous risks to already fragile and over-leveraged global economy. I don't know. Theoretically, in theory, maybe that's correct, but the reality of it is we've never been here before. So, like I said, all the different factors that are going into this economy are different than ever before. So, I don't know. And again, remember, the bond market always tells you what's going to happen. Okay? At the end of the day, the bond market will tell you what's going to happen. And when the bond market broke, a few months back, and we were going with it for a while there, the bond market was scared. But now it's not so scared anymore, and pretty much kind of holding very firm here at around 1.5 on the yield on the 10s. So that should be if you're looking at the bigger picture, that's where we should focus in on if you're interested in the kind of stuff. And since markets are really not doing anything, I can talk about that kind of stuff. Can we repeat the levels again in the chat box, please? Thank you. All right, so that's that story. We'll see what happens. Looking to avoid the 2013 taper tantrum when the markets were caught by surprise when the Fed changed its policy. Powell has said that the central bank will give advance notice of when it plans to trim its asset purchases. Some 40% of the economists, here we go with the talking heads, in the Bloomberg survey expected the Fed to indicate in late August its intention to start tapering, while some 24 economists expect the signal to come in September. So 40% in August, 24% in September, with actual reduction purchases likely to start in early 2023. Recall that many Fed officials have committed commented that they're willing to let inflation run hot for a period of time after the measures have lagged its 2% target for years. That's true. That has always been the target level for inflation. But well, that's your overview of the Fed's wording and what they expect and what they don't expect and how the market's going to play out when that happens. So that's what everybody will be trading on, and at 1:00, a lot of like, what does that mean? What? That means that? No. Really? Wait, no, it doesn't mean that. It means the other thing. Oh, it means the other thing. Well, we got to go up then. Oh, wait, we were going down. So what do we do now? I don't know. And the other thing you got to remember, and that's why we tell you not to trade during those periods of times, is simply because the market, we only can trade so fast, and these guys are all trading with, computers and stuff like that. So our reaction time to their reaction time, totally different. All right, so keep that in mind. I was going to do that, Don, and I changed it just a little. So I got that to 32. All right, anyway, let's see what happens. I don't know if we're even going to get to move that much. You're gonna be trading this stuff later on there, Don? I guess you are, right? You are an animal when it comes to this stuff. You love it. I know you like the Fed stuff. All right. If we can repeat the levels one more time for us. Thank you. And this is the first. It's like 9 o'clock and Don has not made a trade yet. It's the first. I even got a trade in today. Don didn't. Wow. Mark's suggesting that your mouse must be broken. I tend to agree there, Mark. All right, we are hanging around our pivot. Surprise, surprise. Traders are in the wait and see mode before the latest Fed meeting, with U.S. equity futures hovering close to the flat line for most of the night. While the central bank is not expected to take any action, there is plenty of accommodating commentary when Chair Powell takes the stage at 1:30 Chicago time. Some guy expects the Fed to take a patient tone in the gathering, wanting to ensure that they do not overreact to the slow pace of recovery. And the slow pace of recovery, there's a tremendous amount of uncertainty. How much of inflation is being driven by transitory factors like supply chain disruptions, and how much of the slower job growth is being driven by temporary measures like the enhanced unemployment benefits. Powell's recent balancing act has emphasized the need for a full rebound before the Fed could consider raising rates, but has also highlighted a strong economic revival, which has maintained investors' confidence in the economy. The latest outlook comes as the retail sales dropped in May, marking a shift in pandemic spending, while producer price index rose at the fastest annual rate in nearly 11 years, triggering worries about inflation. Others are less concerned. On a one-year basis, inflation is indeed high, said some guy. On a two-year basis, which captures the downturn and the upturn, inflation is still normal range over the past decade. The one-year number are simply misleading when you dig in on the time frame and the components. Inflation not nearly as bad as the headline number suggests. Okay, maybe. Going deep, another area that has been getting a lot of attention is commodities, while everything from lumber to copper and corn and cattle, well, no, cattle is not, have been falling precipitously in recent weeks, denting expectation of a new commodity super cycle. Oil continues to hold the line at $70 a barrel. That could prompt Powell to say he's monitoring the situation or shake it off as another transitory event. While some of crude's rise may be inflationary, there are signals of a stronger demand and tight supplies, with many U.S. companies balking at investment given the transitory transition to green economy. So that's why they don't want to. Everything's going green, so they don't want to invest in making more oil. So there's less supply because of it, raising the rates, raising the price per barrel, and making everything else go higher. Interesting concept. Bezos' ex-wife donates $2.7 billion to California colleges. Well, she's just giving it away lately, right? She doesn't know what to do with all that money she got in the divorce. That was good for her. But why California? I mean, the only thing that does is make sure that when your girls go to, it'll be cheaper for you. Yeah, that's how much he had to split with her. 60 billion. That was her share. She quickly became one of the richest women on the planet. Single women on the planet. Which day isn't? Yeah, I think we're going to be here a while. I think I get your hint that we're not going to be really going anywhere fast. Yes, I do understand your point there. Well taken. Considered, I will take that into consideration. Not that you have to ask me twice, but hey, you know. All right, we're just kind of hanging around our pivot, just in case you were wondering if anything was going on with the big announcement later that the market's been waiting for. All right, just like I said, just kind of hanging. You know, just kind of hanging. I wish I could tell you there was really a lot of excitement going on here today, but not much. That's funny. Oh, that's very good. That's very good. Yeah, that's it. You made me laugh. That's very good. All right. Again, kind of going nowhere fast kind of thing here, which again is not the worst thing. It just is what it is. Today, it is what it is. You know, it is what it is. Well, what do you mean? How does it get? How does the news come out to the market so fast? Well, first of all, the statement is pre-released to like CNBC, Reuters, all the business, all the desks. I mean, but they're not supposed to react to it until 1 o'clock exactly. So the decision is passed out to the news agencies prior to the release of it publicly, because the news agencies have to put it out at exactly 1 o'clock, but they can only put it out if they have it before, and that's how they always know it. So they already have that information. So as soon as 1 o'clock comes, they hit the buy and sell buttons based on what they think is the market's going to do. So that's why the market reacts to it so fast, because they already have it. Except by law, they're not supposed to react to it or get in front of it until 1 o'clock. And that's why all of a sudden at 1 o'clock, the market goes crazy and they all know what they're saying. And we are just getting like, well, what happened? We just got this thing. How does everybody know what to do? It's simple. They already know what to do beforehand because they already got that information. Like, did you ever see Trading Places, the movie? Now, like, they were reacting to the news, and then the reason that they knew what the news was is because they, paid off the person who was given what they knew what the number was prior to the number coming out, because they paid off the guy who was giving the leaked was giving the information to the newsroom or to whoever So yeah, that's how that works, baby. So if you ever wanted an edge, I would suggest going to like a newsroom. Be like, get in front of it and call someone like me. And then I would say, thanks. But supposedly they're like, what's supposed to happen literally is that they give them the information, they type it in a room, and they're not supposed to leave that room alone. And they're supposed to, they stay in that room until 1 o'clock. And then at that point, they can release it to everybody. So it's supposed to be secretive, but when these things happen like this, there's always ways, especially nowadays, to pass information around to somebody. There's always a price for information, right? Just thinking out loud, that's all. Do I know anything? No, I have no idea. Does it happen? Probably not. I'm just talking out loud. No idea if that stuff happens. All right, we are range bound here, as you can see. I know I have to, that's my disclaimer there, Casey, so I don't get in trouble. All right. Again, FOMC is going to be released later on this afternoon at 1 o'clock Chicago time. Consequently, we have to be patient and maybe get lucky and get a trade. Paul, I agree with you 110%. That's for sure. For sure, for sure. Again, if anybody has any questions, comments, thoughts, ideas they want to share, just put them in the chat box area. Good day to throw ideas around. Questions. Always good to have questions when it's slow. Keeps me awake and also gives you to talk about something. Say, I don't want to sit here all the time and not say anything only because it's quiet, but it is what it is. Again, like I said, that's where we're at. Any hedging was already done. Let me tell you that much. The market is, if anybody was going to hedge, they did it already. They're not going to wait for today to, start messing with that stuff. You need a little volatility, and yesterday, a little volatility. They're not going to get much volatility today. So, I mean, even in the options market, it's going to be kind of quiet. I mean, yesterday was like a big, huge day compared to today. Right? It was a movement yesterday, man. So, 20 minutes ago, Don, you told me something was going to happen at 9. Now you're going to tell me something's going to happen at 9:30. This is Don's just hoping that every half hour something's going to happen. It's going to create some volatility in the market. All right. So, anybody have any questions? Good time to ask. Put them in the chat box area. Again, for those of you who might be interested in our education, even though things are slow, it's probably a good time to do it because things are slow. We can explain things, definitely get down to the crux of why things are moving, why things don't move, what to look for. And it's a lot easier to do it when things are slower than it is when faster, because faster you don't get to talk about details as much because there's always like a next opportunity, a next thing to talk about. I don't know if that makes any sense, but all right. KC got the blue band that time. Way to go. Okay. Kind of hanging around here. VIX solidly hanging in there at 16.5. It was at 16.9 yesterday. Whew. Well, we were busy yesterday. And we like the VIX up at the, I'd say in about high teens, low 20s, somewhere in that range. Keeps us happy. When it's teens, it's kind of tough here. Mid-teens. Even high teens is not that good, but hey, we'll take it at this point. We are just kind of hanging around here. It's even tough to even play the range game because there's not even that much of a range. Well, that's not bad if you can get it, right? Casey, considering today being as slow as it is. Yeah, it seems like that's what the market is just giving you, about a point or so. Well, I mean, if we get to one of those, I'd be happier there, Don. That's, I don't know if that's going to happen here anytime soon. All right, well, we're just kind of hanging here. I don't know if anything's going to happen or not, but we did expect a lack of trade today because of the FOMC later. And we'll repeat the levels here for you. If you're going to trade this stuff, remember, be careful, especially later on. I mean, we're here. I don't know if anything's going to happen. You can see how quiet it got over the last few minutes. So I don't know if much is going to happen here. And be patient there. If you're going to take anything like that, somebody said that they're suggesting that you take just point, you're getting maybe point and a half on trades if you're going to do anything, at least at this stage. You know, I don't think anybody's really going to create any volatility here, especially on the heels of the FOMC results. I mean, only one person that could create some volatility here, and that is Powell saying something. And that could happen later on this afternoon at 1:30 after he does his little Q&A session that he'll be doing. That will be following his announcement at 1 o'clock. So we have the Q&A, and the announcement will come out first, then the Q&A second, and then, anything could happen from there. And maybe you get some volatility in the market. I don't know. But either way, ain't much happening, as you can tell. Kind of just a little bit slow. And, but if anybody has any questions, good time to ask. We like questions here. And it's tough to even ask a question when there's not much to ask a question about. Right? But it's like watching grass grow, paint dry, whatever terminology you want to use today, that's where we're at. And unfortunately, I don't think it's going to get any much better later on. Until later on this afternoon. No, I am not going to be trading this afternoon. Let's put it this way, Casey. All the times that I have traded FOMC, that I actually went down on the floor, back on the floor to trade FOMC, if you took just those days, I could have bought you a nice little yacht. It would have been on me. I had no luck with those FOMC stuff. It might have even been a little bigger than the little yacht. All right. Oh, yeah. Hi, good morning there, Chris. My name is Saul Showell, and you are in our trading room. We are trading every day. We are trading mini S&Ps. We are trying to take advantage of ebbs and flows of the market. We give levels out every morning, and if you look at the chat box area, you'll see the levels that are going to be up there for you, and we give those out before the market opens up, and then we use those as a guide for our day of trading. You can see that our pivot there was 38, and we've kind of just pretty much did not get triggered on the downside. We did not get triggered on the upside. We're trading right in the middle of this range here. And it's a fairly quiet day, but usually there's some movement and volatility in the market. Unfortunately, because today is going to be the release of the FOMC results from the Fed, the market volatility has kind of been sucked out of the market today, at least until later on this afternoon. So, but we trade here every day. We're scalping the market. We're trying to get 2 to 3 points on our trades, depending on volatility. And that volatility is always going to be, we are dependent on volatility for us to get opportunities to trade. We don't usually like to go create trades, but we do have a lot of price action opportunities that occur. So we have those levels that we give out on an everyday basis, in addition to the price action opportunities that occur, and the combination of both gives us the setups for us to trade, to scalp the market. The ideas and concepts that I'm talking about, we also teach. So that the goal of the education course here is for you to be able to find those levels on your own, in addition to the price action opportunities that the market might present itself with. So between price action and levels, and it gives us opportunities to trade the market. So that's what we do here on an everyday basis. So we have this trading room to help kind of work with everybody here. I was trading on the floor for a while in the bond pit, and when things transformed over to the electronic trading or screen trading or whatever you want to call it, we made a move here to the equity market, only because we feel that there's some good ebbs and flows in the equity market. It gives us good opportunity, and consequently gives us a chance to scalp. Bond market used to be a good market to trade, but ever since the 2007 financial crisis, it has become a lot tougher to trade. The volatility is not there. It's usually one way, and much harder to trade that market. And so we've gone to a different market to trade. So I don't know if you're interested in trading futures. We are trading futures, equity futures, and welcome to the room. That's what we do here on an everyday basis. All right, Peter. Sounds like a good thing to do. All right, we are just treading water here and waiting till 1 o'clock. Then when the FOMC releases its stuff, probably not much is going to happen, I would venture to say. And if it does, it's going to be just make sure you keep your stop in there because you never know when volatility is going to occur and create some craziness for unknown reasons. Right. It is a beautiful day in Chicago, that's for sure. It's been a beautiful day. The weather's been great around here. But again, unfortunately, we do need some rain. Yeah, there's a heat wave in California. Well, yes, there's always a heat wave in California. All right, Casey, have a good one. Good job today. Soybean thinking it's going to rain. I hope you're right. It's your barometer for forecasting, watching the soybean market. It's funny, actually. Yeah, that's what they suggest. We'll see if it happens or not. Really? How do you have your apple cider vinegar? Or you mix it with something? You take a spoonful? I mean, how does that work? Interesting. You need to have the lemon and orange juice. Is that a good? Is that why you have some kind of chemical reaction, or just to make it taste better? And the orange juice. Hmm. That makes sense. Now that makes sense. Hmm. Okay. I think I might have to try that. Somebody else just vouched for you there. That they put two capfuls of the apple cider vinegar in water every morning. Jeez, I'll be happy if I can go down a notch. Forget about two notches. I never heard of that one. Yeah, definitely got to try this one. Wow. All right. Well, we got time around here. You know, watching paint dry gives us time to do a lot of things. All right, we'll give it a crack. See what happens. All right. Well, definitely look into it. Thanks for. So this is what happens when there's nothing going on. That's what you need. You need information. That's the reason we started this room, just so that we can pass information around that way. There's always a jokester in a group. This is what happens when there's nothing going on. Okay. And if this works, everybody will be thanking everybody who's here today. Waiting for the FOMC with nothing to do. All right. I think we're going to be here in the background. At least I'll be around for a little bit longer. Let's hope everybody, if you're going to be staying around, and look at that blue line's a flat line. That is really, even when the hourly blue line gets to be flat like that, we're not going anywhere fast. And that's where we're at. I mean, the hourly blue line is starting to get, whoa. And then when you have the blue band, the green band, and everything like on top of each other, that's even slower. But hopefully this afternoon we get a little extension of the range. And like I said, you don't have to trade. If there's going to be a good reason to trade, it'll be tomorrow. If the number is completely out of whack, we'll have plenty of opportunity tomorrow. So be careful is what I'm trying to say as far as, later this afternoon, if you're going to be around trading that stuff. It's one of those things that, you just never know. You never know what's going to happen, but you do know it's going to get a little bit crazy. And then his Q&A session afterwards is even going to be, might be nuttier, especially if he says some stuff that doesn't make any sense. So if he says things that are going to be really out of the realm of what everybody's assuming, then, then it's going to be nuts tomorrow too. So Well, yeah, well, the new generation, those chips are fast. There's no doubt about it. And yeah, they do what they're supposed to do. That's really what really at the end of the day, those they do what they're supposed to do. They're supposed to make those computers work faster. All right. Well, now you got it. So that's a good thing. And it's actually a good. I mean, I'm glad you got it because I don't know if you are trading, have been trading much or a lot, or if you've been trading. What have you been trading? If you can't load up the ES, right? But um, yeah, it's a good market to trade. It moves, gives you opportunity. I say that as we're not doing anything, but it will move at some point. We will get another. You know, it will move. You know, when dynamics and all the different things that affect the markets change a little bit, volatility will come back in the market. It's almost like a guarantee. You know, so you just have to be patient and go through this quiet time. And again, it is summertime too, and that also adds to the slowness of the market. And especially, you know, considering after this week when there's nothing else that's out there that's going to be coming out anytime soon, how slow this market could be. Well, yeah, it might. The only issue there is, you know, does it trade well technically? I don't know. I don't know if it does or doesn't. I don't trade the Nasdaq, so I can't give you an answer to that one. My philosophy is that we try to stay focused on one market, at the most two, that you understand the dynamics of it, what goes into it, what numbers affect it fundamentally, and then how it reacts well technically or not. You spread yourself thin with other markets that you don't understand a lot of things, then it becomes tougher to trade. They're tougher to make money because you got too much going on. Yeah, like I said, I haven't traded in Nasdaq, and it's not. I think it's a little thin, but I'm not sure. But there's a lot more. I mean, you know, volatility is always an outlier because you you want it, right, and when you get it, it could be too much. You know, because the computer programs take over, and everything starts running crazy, right? So you either get, you know, you want that medium range that's really good. Like when we in last year, you know, when the markets were really moving around, you know, we had 10-point stops in our markets with 10-point profit targets, and we were getting them, both getting filled on both the positive and the negative side. So volatility is a double-edged sword. You want it to trade, but you have to adjust your trading to be able to handle the volatility. So how do you adjust the 10-point ranges and 10-point stops? As you trade less size, you pick your spots a little bit better, you make adjustments to the volatility. So we want volatility, and everybody wants volatility, right? But when we get it, sometimes it overtakes us, and then we have to do things that we're not happy about doing. So but you know, this is what trading is all about, to be able to understand when to pull back, when to wait. Even like I said, even when we're looking for volatility, sometimes you have to pull back and wait for the right time to trade. Even with that, pick your spots better. All these different factors come into play at that point too. So yeah, that's. But we try to adjust here. We talk about that all the time. This is the longest I've stayed with you guys, and there's absolutely nothing going on. I like you guys. I do, but I also, this is tough little trade. So I say like it's watching paint dry and we're watching grass grow. You know what Don's analogy is to all of that? Those kind of, Don says it's like waiting for a cow to poop. That's what he says. That's when I said that, he said, he sent me that text. I'm like, I didn't know that was a thing. But I guess it was. So we're expanding our horizons here in many different ways. I just want you to know that you're not just here just to listen to me gab when there's nothing going on. You're learning about apple cider vinegar, lemon, OJ, cinnamon, and you're learning about cows pooping, watching that transpire itself into something. I don't know what, but this is what happens here. Okay, well, good to know that too. Yeah, I'm too funny. It's nothing much Jack Benny humor. Wow, I don't even like Jack Benny. I guess I should watch him more. It's too funny. Not Rodney Dangerfield. That's somebody that I liked. He's hilarious. He was hilarious. Okay. Well, we seem to made a move here. to the upside. Don't start. Seriously, don't. That's a couple good. Hey, he's got, before they had CDs, and he came out with like an album. I had it. I don't know where it is anymore because God knows where my albums are. But that's I think I went to even see him at. He was, yeah, they went on tour. He did a comedy strip, and I think I went to see him. It was hilarious. I mean, absolutely. I guess you got to appreciate his humor too. I mean, that's not for everybody. So, I mean, I'm being compared to Jack Benny, so you know. All right. All right. So everybody, be careful later on. If anything happens in the near future, I'll be around, but you never know. Be careful later this afternoon for sure. For sure. If you're going to trade, that is. Crude almost $73. Well, always seems when crude goes up, the market goes up. Counterintuitive, I understand, but it seems to be what happens. Don't understand why that happens, but that seems to be what happens. I mean, I understand fundamentally, I just don't agree with it, but I know, but that I've heard that, but that happened the last time they had a break in the oil, which was what, 10 years ago? I don't know, 5 years ago. Do you think the banks could diversify and get themselves out of that little sticky situation by now? Since they saw what effect it had on them. I mean, you can't use the same argument on me when it already happened and people are reacting to it and they react to it. I mean, it already happened. So that's the part that I don't get. It's like it happened. So and you don't think that they adjusted by now? I don't know, that's what I'm saying. I just don't know. They should have been adjusted by now. Well, again, they've had time to either get out of some of that or hedge. And these people, if they got that many billions of dollars, they know how to hedge. And so if it happened once and they got scared, right? I'm sure they know how to hedge by now. So I can't buy that argument about the banks are going to get in trouble. I understand the fact that they do have money invested in it, but still, they've had, and the talk of green over the years, you've had plenty of opportunity to adjust and get yourself out of a disaster, and at least hedge yourself for sure. That's my philosophy on it. I mean, I could be. I have no idea what I'm talking about. I might be a little blind, but it looks like the bond market and we are doing the same thing, right? Is that like not the case? So I think what the bond market does, we're going to do today. Just saying. The chart kind of overlaps, kind of looks the same, but maybe not.
Anybody has any questions about Sol services, don't hesitate to post them. If you're interested in becoming a monthly member, we got a great opportunity for you. Come in on a daily basis, receive Sol's levels, go through the morning session with him. Usually it's $379 a month. It's on for $100. Raise your hand if you want me to send you out the information for that. If you're new to trading and you need trading software, or if you just want to make a change, let us know. We can hook you up with some great trading software. If you want to get set up with Sol's charts, certainly join our friends and family offer at the $100. Adam, I know we got a date on Friday. Agatha, let me know what you're thinking. Hey, Chris B, welcome. Hey, Dean. Jim B, let me know. Jim B. Orman, let me know. Orman. Richard D. Tybor. Just let me know back in chat. Thank you. And if you want, raise your hand and I'll send you out the info. Hey, Tybor, how are you? You know what I can do for you, Tybor, is I can send out, if I can find it here, I can send out the opportunity to sign up with that special link that I was telling you about. No stressing here, no stressing. There you go. That's out to everybody, actually, so Tybor, you should see it. You got it. Or mine, I'll send it to you. Appreciate it. Listen, you're saving $279 a month by me sending this out to you, so take advantage of it. Armand, I sent it out to you. Let me know if you got it. Chris B, let me know. I know we're in a pretty tight range today, but there's tomorrow, and there's Friday. You never know. The concept here is to be done and banked your money by 11:30, which we're coming around the corner on. So it's 2 hours of concentration based on a price action trading methodology and strategy. Sol has various levels of service. One is the friends and family offer I just gave you. You come in, interact, receive Sol's levels and his zones, go through the morning session with him. And then if you want to be part of Sol's course and his mentoring work, that's a conversation for people that are part of his friends and family. So don't hesitate to join. And we have a private trading consultation with you, and then see how we can help you based on Sol's class and his mentoring. Pretty straightforward stuff. It's very personal for him. Becomes very personal for you. It's a huge opportunity to really buckle down and learn how to scalp. Scalping is, trading is easy, making money is hard. So you got to learn how to do it. Got to take your lumps, and hopefully you can turn it around and become consistently profitable. And those that are part of Sol's friends and family, thank you. I'll be in the background if anybody needs me. Could get quiet now, between now and, so we have a window of opportunity, which is the first 2 hours of trading. From 9:30 when the cash market opens. And the S&P 500 E-mini is a derivative of the price of the 500 stocks in the S&P, the Standard & Poor's S&P 500 E-mini. Our ability to come in and trade while the market's going up or going down, is a huge opportunity for us to look to make money based on that price change. This service, we try to help you put that into an orderly fashion, help you develop discipline and focus at that price action and change. And Sol is giving out his levels and zones, and we're working through the morning session together, and that lasts for 2 hours. And after that, if you haven't banked your money, let us know. Yeah. If you haven't banked your money, let us know, and we can give you the options to help you work that out. And it's really up to you as individuals. Saul looks to take 6 people or less in his mentoring. And if you want to be one of those people, raise your hand and we can try to help you in that regard also. So I'll be in the background if you need me. You know what to do. You know how to do it. And just let me know. Thanks.